Hey everyone, this is Bill, and welcome back to the channel. We're focusing on stock market investing today. It has been a very unusual market recently. In the market today, some value stocks are moving higher after scoring strong earnings, readying for the reopening of the economy and benefiting from a value rotation, with investors seeking mature stocks, while some are moving higher poised to profit from the expanding infrastructure legislation forthcoming. But many high-flying growth stocks short on profitability, facing inflationary pressures, inclusive of rising interest rates, are getting taken to the woodshed. Of course, the tech-heavy FANG stocks are doing well, with some even thinking these stocks are having something in common with Bitcoin, being considered a store of value. And why not? Most long-term investors are fond of and heavily invested in these stocks. If anyone really knew the real pinpoint reason the retail portion of the market is currently getting crushed, they would have exited before the carnage initiated. No, it's not that old adage of sell in May and go away, for nobody has gone anywhere, and they are still selling heavily. While the aforementioned reasons I contend are all valid, I think there is a much more sinister culprit at play causing all this damage, and it has to do with the suits on Wall Street. You see, I don't think they like the WallStreet Bets crowd one little bit. They don't appear to like retail investors bucking the norm and rivaling the quote-unquote professionals, and they certainly don't appear to like Cathie Wood of ARK Invest very much. Take a listen to Jim Cramer on CNBC, who arrogantly jibbed Wood earlier in the day on Squawk Box, then ratcheted up a notch later in the day on CNBC's halftime report.
People, friends and otherwise, what's up with the tech trade? Am I in trouble with my FANGs and my ARKs and all of those stocks that did so well and now seem they can't get out of their own way?
I truly want to distinguish between ARK and FANG. The FANG stocks came in, they were lower multiple, they had good runs, and they delivered. And for the most part, I think that I'd buy anyone up. When I looked at what ARK was buying yesterday, I don't know, maybe Stephanie knows some of these. Zymergen, the Repair Therapeutic Recursion, a 908 device, CM Life Science. These are really, I guess, I'm going to call these odd stocks. And when I look at them, I start thinking, okay, well, is this the time for Galileo acquisition? Is it really that time? And Vuzix, is it time for Vuzix? So I don't know. These to me are not as blue chip as I like, Judge. But maybe Vuzix, it's time for free. Oh, she sold Freesia. But what's?
I've been following Jim from his days back on Kudlow and Cramer, and I love Mad Money. Of course, I've never met Jim, but he seems like a cool guy, and generally speaking, I've enjoyed his analysis, although I don't always agree with it. Maybe I should have, given his incredible success. But I have found Cramer's comments recently about ARK and Wood rather unbecoming, and quite honestly, telling. Why does he feel compelled to trash ARK at any given chance? And what is Cramer's problem with Vuzix? I happen to own a small position in Vuzix, which trades on the NASDAQ under the symbol VUZI. Jim found it puzzling ARK Invest bought more of this stock during this downdraft. For what it's worth, I wish I had more dry powder to add to my current position. Let's do a quick evaluation of Vuzix. According to Benzinga, quote, Vuzix Corp is a supplier of smart glasses and augmented reality technologies and products for the consumer and enterprise markets. The company's products include personal display and wearable computing devices that offer users a portable, high-quality viewing experience, provide solutions for mobility, wearable displays, and augmented reality. Vuzix holds over 166 patents and patents pending and numerous IP licenses in the video eyewear field, end quote. Investors Business Daily notes Vuzix, quote, manufactures monocular and binocular video eyewear devices for consumer, commercial, and industrial markets, end quote. Vuzix is the leader in the development of these smart glasses. Folks are not walking around with these smart glasses these days, but they soon will be. The smart glasses may just replace the smartphone in the next decade. After a month of heavy pressure on the NASDAQ, particularly on emerging companies with limited revenue who are working on disruptive technologies, IBD gives Vuzix an above-average composite rating of 67, ranking it third in the group of consumer product specialty. The EPS, otherwise known as earnings per share, is just below average. This is considered typical, if not above average, for these types of companies. The relative strength rating is the highest available at 99. In fact, in looking at the chart, note the recent selling has been on lower than normal volume, indicating a lack of conviction in the selling. Vuzix does appear to have slipped below the bottom trend line, again on low volume. So is Cathie Wood right, and is it a good time to buy, or would anyone buying now be laughed at by the suits led by Jim Cramer? Nobody has a crystal ball, but given that I do like what the company is doing and believe in its long-term future, I have no problem buying it here. It should be noted for the most part, however, I'm playing long ball.
So Lair leans into one, and an absolute cannon shot out of the ballpark.
How about a light beer?
It is certainly possible the NASDAQ could continue its current slow bleed until we get inflation numbers next week. Or maybe the sellers are exhausted and the stock runs up 10+% on Happy Friday. I have no idea. Hell, I don't even know what I'm having for lunch today. But long term, I will sit firmly with Cathie Wood on this one. So what is really going on, and how should you play it? I want to highlight this tweet from investor Paul Manelli, which I thought was spot on. Quote, "We've been through this before. We know their gig. Make it go up, then down. They know if you do this again and again, you'll shake people out. Then once the stock is accumulated on the other side, suddenly one day the prices will be marked up. Stay strong," end quote. In my opinion, the suits are running the stocks up, then selling, taking quick profits. They make the quick bucks, and then they can tell their clients that unlike the Reddit crowd and the imposters like Cathie Wood, they are out and avoided the downdraft. Forcing prices lower, they get you sick to your stomach to shake you out with you selling into the weakness. When you sell, they buy. You end up being a dog chasing cars. I deal with mortgages often, and interest rates do have an effect on the goings-on. But unless they skyrocket, rate changes do not play a pivotal role on the success of a purchase, a trade, or change the trajectory of an emerging company. Everybody on the planet expects rates to rise in the near future. We have printed gazillions of dollars, and we have a dramatically improving economy with the virus retreating and idiotic lockdowns being lifted. Any CEO worth anything has been planning for this. But are you sure the Fed will raise rates this summer? I am not. While improving, the economy is not real close to being in position to yank back all the excess cash in the marketplace. We still have supply chain issues, excessive debt, and extended government assistance to folks that must be tapered. Taxes across the board are about to significantly be raised. We cannot continue giving folks stimulus because, as the great Art Laffer once said, quote, "If you tax people who work and pay people who don't work, you will get less people working," end quote. So it might be a few years before the rise everyone is fearing is really initiated. As always, folks, take this commentary as information for you to consider, and please do not treat it as investment advice. I'm not a financial advisor. I'm just offering you opinions that I hope might help you. I think Jim Cramer's recent commentary is representative of the suits who run algorithms I am competing against on the trading floor. I can't win that game, so I don't even play. I play my own game, and over time I will win that. So, although I like the stock, for example, I'm not jumping in Northrop Grumman here, but I sure would Vuzix, and for that matter, any of Cathie Wood's currently battered ARK funds. What do you think? Drop us some comments. As we conclude, please help us out by liking our video and subscribing to our page. We sure would appreciate it. Please follow us on Facebook over at Future Breakout for additional content. Thank you so much for watching, and we'll see you next time.